there's a lot of regulation, and it's a little bit of a broad question, right? Because you can look at regulation from the markets themselves to the ETFs themselves. If we look at just the markets themselves, the question becomes is everybody wants to create regulation when sort of market events happen. It's always bad market events. Nobody wants to create them when there's good market events. But you never know if those regulations are actually impactful until you have another market event. And so far the market events are so spread out, it's every 4 years do we kind of forget what happened. And at some point, the analogy I'll use is, I can make my home kid-proof as much as I want, but my children are still going to get hurt. So no matter how many regulations I change or do, basically someone's still going to feel an impact of that. And I think at some point you can over-regulate. So what I think really needs to happen is at some point we need to start educating and creating education for people and having them understand how the market structure works and what it means with what's going on. And I think that's actually more impactful than just creating regulation. Because as I said, I can kid-proof my house all I want, or I can teach my kids what's dangerous. And in the long run, I think which one's more impactful is the actual education of telling them what's dangerous versus just don't touch that, and I'll explain why later. When people were calling me around what happened with the volatility in August, it was more about asking what happened or what is going on and asking for how do I explain this to people and how do I understand what's going on. It was very much less to do about I'm scared, I'm terrified. There was none of that. It was I want to understand what's going on. I want to be able to explain it, and I want to be able to answer questions that come in an intelligent way so I have an idea of what's happening. And when you take it from that approach, it's understanding what's happening versus the world is falling, which it's not necessarily falling, it's behaving as the market structure is set up. And from that perspective, the more someone knows, the easier it becomes to understand. I think some of the volatility that we've seen, especially on August 24th, our clients didn't behave any differently. Our ETFs are set up as long-term strategic buy and hold. And what our clients mostly tried to do is take advantage of the market sort of decline or volatility to buy into it. But there was questions about how to do that. There wasn't questions like, why did your ETF fall so much or what happened to it? And that was a very different discussion than maybe others could have had.